Here he is, the man, the myth, the legend, Tom Nash. Luke, you just did a bad tweet, or bad chat. So Tom Nash, how are you, my man?
I'm good. How are you, Jason?
Oh, come on. Am I waking you up over there?
No, I'm good. I'm just trying to stay. I can't do Luke's energy. Coming on after Luke, it's so hard because he's so energetic. I mean, the man is like a 5-hour energy in a suit. I mean, it's hard to follow that act.
You should see if someone could bring me Tom. Hey, John G. Get over here. What's the DevOps you want? Hurry up. I'm live with Tom Nash.
Kubernetes, Nginx, Kong.
Oh, Kubernetes, Nginx, and Kong. If you know any of that stuff, then guys,
quick.
Apply. Okay.
Handle outages.
All right, cool. So thank you. So that's that. Tom Nash. I was on Tom Nash's show on Sunday. Here's a link to Tom Nash's show that we did. It says allegedly Tom Nash. You know what it says?
Allegedly, in my opinion, blah blah blah.
I got it. Okay, I got it. So Tom Nash is right there. There's my link.
You killed it. Where your mom killed it on the show. It was such a nice touch, and we got you to cry. You cried on the show. I got you to.
That's the one time, Tom, you screwed up in the interview. I know people said that you like interrupted me and stuff, and people say it to me all the time on my side too. So don't worry about that. The one time is when I was like getting teary-eyed. You shouldn't have talked. You should have let me really go, and then you started talking, so it got me out of the emotion. And if you didn't, you could have gotten like tears shedding down my cheeks, and your thing could have gone so viral that the New York Times would have covered it. I don't know why, but maybe.
Well, it depends on what my strategy is. If my strategy was, I was kind of trying to balance out the, helping you out of it versus the virality of it. So, I'm a good friend. What can I say?
I think it'd be better to get the virality of it. Yeah, Refined Warrior. If you go to the YouTube link, you'll see I got it has to do with the internet going out. By the way, Lou Pasternak, you are nuts. I'll say that for a fact. Okay. Some guy just wrote a thing in the chat. All right. It's like a fetish, crying. I don't know what he's talking about, Brent. You're gross. So Tom, Luke guessed the stock you were talking about. Of course, Rohan's not where he's supposed to be, but Luke
exposed.
Yeah, I'm gonna have a video camera on Rohan all day because he didn't let me in today. He didn't. Yes, I cried, guys. I did. Brent, I cried on camera about your sister. So that's what it was about. So
I think Brent, it was a beautiful moment.
It was a beautiful moment.
Yeah.
Yes.
It was very authentic, and when your mom came on and she told that story, it was also very authentic. I think that was amazing.
She was so confused. She's like, I was listening to it on the TV, and it was 30 seconds delayed. I'm like, Mom, turn the freaking TV off. So anyway, all right. So Tom, let's get to stocks. The guys, just a precursor on Tom. He gave the last stock he gave me was BNGO, and I bought it at 5. He bought it at 3, I think, and it's at like 12. What?
Yeah. Well, I bought it 308, but this isn't that sort of stock. This is a completely different stock. Don't expect BNGO numbers here. This thing isn't going to go 4x. It's an established company, so it's a $24 billion company. So it's a massive, massive company. They've been around for 21 years. So that's kind of for your portfolio. That's kind of the stock that you kind of put there and you let it cook for a couple of years. That's a long-term value investing. I think the stock is going to do 30% over the course of the next, let's say, 18 to 24 months for one reason, which I'll tell you today. But first of all, I don't hold back. So the stock is, I told you before, Jason, it's Fortinet, FTNT. It's a very established company. You can put the stuff in the chat because my accent, not everybody can understand. But essentially, it's a company that's been around for 21 years. They do cybersecurity, and they're pretty much, I call them the Scottie Pippen of the cybersecurity community because they do everything really, really well. They don't have any shortcomings. Everything is really good, starting from the financials all the way to their margins, to the products, to the services, to the growth, and pretty much, and the potential also. The upside is there with new technologies. They made a really smart acquisition last year, about 6 months ago. They had some issues. They had a whistleblower lawsuit in 2019, which they settled. It had to do with some labeling issues, but it's finished and done. I don't think that was that much of a huge deal, and they faced whatever had happened there. So this company literally went from I think 1.2 billion in revenue to 2.5 billion in revenue in 4 years. So 2016 they had literally half the revenue they have today. If you look at their margins, it's monopoly money. 80% gross margin, almost 18%, closing on 20% EBITDA. Year-over-year growth, 35% EBITDA year-over-year growth, almost 20% revenue growth year-over-year, virtually no debt, non-leveraged, 2% short interest in the market, so nobody's shorting this company at all. I mean, people not shorting this. And so everything is well and dandy. If you look at the financials, where is the element of the underpricing? It's an expensive stock. It's at $150. I think it can go all the way to 200, maybe 195. So in the 200s for one reason. I think that this is a very established company, but the market isn't pricing in their latest acquisition. So when I looked into what this company is doing as far as where it's heading, where it's trending, so cybersecurity is pretty saturated. We have Checkpoint. We have a lot of competitors in cybersecurity. The new thing in cybersecurity is this new thing called SASE. It's called Secure Access Service Edge. Essentially, again, I'm not a specialist on this topic, so don't crucify me, yeah? But essentially what it means is that this is the security that not specifically focused on your own servers, but rather on external stuff, the work that you do on the cloud and potential hazards that working remotely, basically your employees create for your organization. So basically things that happen on the cloud and externally from your organization, basically with everybody going to remote work and everything moving to the cloud, it's a whole different set of security, which kind of the old school guys are not really that much good at as they probably should be, because this happened pretty fast, the whole switch of the remote working. So in July 2020, they bought a company called OPAQ or OPAQ or OPAQ. I don't know how to pronounce them, but it's OPAQ. And they specifically, that company specifically does solutions. It's a startup and it specifically does solutions in that area. Essentially, they almost instantaneously became kind of, I would say, almost the leaders in this whole SASE kind of field, which is kind of the remote cloud security, external security rather than internal security. And there was a small spike in July when the deal kind of went through. But if you look at the chart, the price really hasn't changed since before the transaction and after the transaction. They had a little bit of the stock recently kind of did well, but over the past year, the stock did about 30%. In this crazy market, I mean, it almost means that they pretty much did, they did kind of the standard growth of whatever the S&P did. So I basically see it as a company that has very, very low risk, extreme operational efficiency, great margins, great products. They still have a very nice package for their traditional products, and they're kind of the leaders in this new business that they're developing, the SASE business. And the best thing about them is also one thing that I'm a little bit strange. I like companies where I can still get the founder as still the CEO. Specifically, for some reason, I kind of like this better than the CEO that every 3 years we have a new CEO. So again, here we have the founder who's still there. He's been there since 2000. He's still the CEO. He still manages the company. So that's kind of always the things I'm looking with these older companies. I like to see if the head guy is still there, even though he doesn't have to be. I mean, the dude is a billionaire, right? So, and I'm not the only one who's thinking that. If you take a look across the board, a lot of really good analysts that I've checked, including one guy from Oppenheimer. Oppenheimer gave it $190 target price, and there was a BTIG gave them a big boost. So a lot of people are saying what I'm saying here. I'm not the only one. And again, this is not going to be BNGO, but I mean, it's a really good. I think it's a really solid long-term value fundamentals investing, like I like to do. So
I love it. I love it.
This is Tom Nash, and these are my thoughts.
Yeah, these are, and this is an opinion. And now you did say, so you're talking about margins and this. What brought you to this idea, though? How did you focus in on Fortinet? Like, how did you come to this thesis? Is it from like what you know the company from something, or you work in the security space? What is it?
So I started digging around. I really like tech, and specifically lately have been going deep into the SaaS world. I think that's my thing. I love SaaS companies. So and as I started going deep into the SaaS world, I discovered a lot of great companies. I recently started looking specifically into cybersecurity, and I went through 5 or 6 of the leaders in the category. And actually, there's another company that's really good in this field as well, which I'll save for the next show. But I found like 2 companies. This one really blew me away. I was basically building like a spreadsheet of, like a scorecard, and I noticed some companies. There's like 5 or 6 that I was looking at. This thing was performing like an A plus, A plus, A plus. I couldn't find a problem with this company at all. I couldn't find anything I would say, well, here's the problem, or anything like that. They're innovating. They're still conservative, still making great margins, have a very solid clientele base, $25 billion of market cap. So there's nothing I see here that can really, for me, it's a very low risk investment, and I really like that. So it's not stagnating. It's growing like EBITDA is growing 35% a year. Revenue for a $25 billion company to grow 20% a year in this industry, it's really exciting.
Yeah, totally. I mean, that's so do you have as much conviction on this one as you did BNGO at the time, or is it?
Oh yeah, I love this company, but again, you have to give these things time. I mean, when you're talking about these blue chip companies, Jason, they don't behave like penny stocks. There's a different pattern to these. You have to be patient with these companies, and this is not the company you put in your portfolio and that you check every day. You gotta. It's like a microwave dinner versus like an oven baked dinner. You have to let it cook for a couple hours. You know what I mean? This thing needs time, but eventually the market will catch on to what's going on with this, because they're currently leading this new trend, and it's not baked into the price yet.
Got it. No, that's good. That's good to know. That's good to know. So, now I'm
also happy to go back to fundamentals. This whole GME thing was really crazy, but I mean, we're finally talking about fundamentals and value investing.
It's right. I mean, I told you about API a few days ago, and it's taken off. It powers Clubhouse, and then so API Agora is up. But I love the fundamentals. I mean, my stocks like GAN, the thing behind the thing, ESTC, Elasticsearch. I end up buying more shares, Tom, today. ESTC, Bill.com. That was a Luke pick. BILL. I buy everything that Benzinga uses. That's the way I buy these things.
When you told me about Agora,
yep,
they were $37 when we spoke about it. It was I have a note here from I think January 16th or 15th when we spoke about it.
Yep.
Agora, and it's now at 73.
73.
So it went from 37 when we spoke to 74, and you did it on the show here. I remember we were talking about it here, and then you did it again on my show. So it went another 30% since then.
And I don't know if I bought it, and I don't even know if I bought it January 15th, but that's what I do. I find big gainers. It's just the question of getting the people to want to buy them, and wanting to buy them. Like you find big gainers too. BNGO, FTNT. I don't own FTNT yet. I probably will buy it. But today,
there's no rush with this company. That's that's not the sort of company you just get it. There's no rush. I mean, you can always. It's not going to go up in a day. I mean, it's just you can do your.
Are you against margin? Using margin?
It's a tough question.
I'm not. I used to be. And the middle of last year, like October or August, is when I started going more into it, and I lowered my margin a lot the last 2 weeks, but. With one of my earnings plays that I just bought, I went into margin for it for sure.
There's a whole debate, Dave Ramsey versus people who say cash is trash. So I'm probably somewhere in between. I really have a thing with debt, like a psychological thing. I don't like debt in general. I'm very conservative. If you can avoid it, it's a good tool to catalyze a business or in a portfolio, but it when you increase the risk, you increase the upside, you increase the downside. So
I agree. So if my earnings, So I'm doing, but I
depends.
If you want to double money,
let me give an example.
Yeah.
Okay, if you are investing in a stock like Tesla or a stock like a blue chip, like a blue blood stock, you might as well do it with margin, because this thing isn't going to go 50% down. You might enjoy the upside, the downside. These stocks tend to not underperform. I mean, if you look at if you spread it out for 2 years, I mean, The margin is just a catalyst to making more money with these types of stocks. But if you're putting margin into penny stocks, then it's getting dicey.
Got it. Yeah. No, I hear you. I hear you. I have one penny stock, but I bought this one. This guy Jack said, and it's probably shady, but I don't know. He likes it for long term. XERI. I don't really know it. XERI. So
you experiment a lot with stock.
Yeah, I do, but I sift out the things. I listen to smart people, and then I have my own conviction on stocks. I listen to
But
go
Jason,
ahead.
it tripled in the past 2 weeks. XERI.
Yeah, I bought it at 41 cents. I bought it at
Okay, gotcha.
40 cents. 40 cents. Bought it at 40 cents. I went to 49.
Yeah.
No. I sold half. I made 25%. I sold half my position at 48 cents. So that's the one I have. Yeah, that's it. So are you buying call options or buying this? You're buying the stock.
I'm buying the stocks. I don't do calls. I'm a grandpa. I'm so old. I'm so conservative. I no leverage, no margin, all long, all just stock.
All just stock. Okay.
I belong in Florida in the 5 p.m. early bird dinner. that's where my friends are.
Yeah.
Bingo class.
You get the early bird meals.
5 p.m. I'm there.
Yeah. So all right. So Fortinet. Okay, and then you said you have another one. But we'll wait on that. That'll be the tease. And if you didn't get a chance, go to Tom Nash's channel on YouTube, Tom Nash, and we did an interview on Sunday. My ugly mug is on his page. If you just go to videos, it was a long interview. There were some moments. You can go on YouTube. Here's the good news. You can watch it in like 1.5 speed. I already talk fast, so that 1.5 speed is probably 3.0 speed. So therefore, you'll get it done like in 20 minutes. Think about it that way, okay? So
I think you did a great job because you gave them a lot of value as far as a lot of stock picks and a lot of if people want to get to know you, like behind the scenes, behind the the CEO. You gave a lot of value there.
Got it. Okay. I hope I did. I mean, I try to give my picks, I give my holdings, and I'm good.
And you exposed me. You exposed me.
How do you figure?
Larry. Everybody knows my name is Larry now.
Larry. He's no longer Tom. Tom's not his real name. His name is Larry.
Larry.
Call him Larry for now on. Another stock that's fucking sorry, Bill, I can swear it. Bill's not here. Is TerraSend. I bought it at $3, $2.80. It's at $12.80. It's another one that's great. Got some good stocks here. And then Tom, after you, we have another exciting guest who gave me a stock that I bought. I didn't have as much conviction in her, and I got a little scared at one point, and I sold some. It's down today 12%, but since she gave it to me, it's up 32%. BCRX, BCRX, and then the other stock she gave me is, and I have it, ATNX. Those are the two stocks she gave me, and that one's up 22%. Again, I didn't have as much conviction on it, so when I was trying to reduce the margin, I'd say I had 12,000 of it. I went down to like 4,000 of it, and so that's up 22%. But it is what it is. I can't complain. But she gave me two stocks, and they're both up a lot. So so she's coming on. She's the biotech queen. Vivian Mason works in that industry. So
BCRX somebody just put out an article yesterday saying that this is the most undervalued stock in the market.
Oh, she agrees with that. I promise you that she agrees with that. I bet you if she could right now, she would margin to 100% on that thing. So it's down 12% today. I'm gonna have to ask her why. I need to know if I need to
BCRX.
B is in boy. C is in.
No, I see it. Yeah, BioChrist Pharmaceuticals.
Yes, it's down 12% today.
Everybody's bullish on this. I'm looking at all the analysts.
Vivian, why is it down 12% today? Oh, she's frozen. Vivian.
She's here.
She's not talking though. Oh, there she goes.
Can you hear me?
Hey, Vivian.
Yes,
we can hear you.
We can hear you.
Oh, I think there was an article about this on Wall Street Bets, and I think a lot of people just want to squeeze the shorts out of the stock. There's 90% of institutional ownership on that, so the float was, very small compared to what the short selling were. But at a $1.7 billion with a product already that's gonna pull estimated $500 million a year, it's still undervalued, believe it or not. And then we have the Factor D pipeline that there's a potential to be better than Exelon Factor D pipeline that got bought out for $36 billion 2 months ago. So, it's a great opportunity to add right now, because there's a lot of people that just trade in and out of the stock. I'm holding. I haven't sold and I haven't traded. I wanted to trade and I want to buy 5,000 shares yesterday when I saw the whole hype. But at a pre-market, it was already so high that I'm like, I'm not chasing it, and I don't want it to average up. But I knew this was going to happen. It's just the day traders just flipping for pennies. I want to $40, $50, $60 buyout. So I'm holding long.
Okay.
This is the age of the Wall Street Bets, Jason. This literally went up after Wall Street Bets post.
Yeah, they call it bio war. So they call bio war. So they wanted to go after the hedge funds that.
So today it's getting hurt because they're not going after it today. Is that the idea?
Yeah, people just just sold off. But we have a UK approval in Europe approval this quarter coming, and we also have some data in our Factor D pipeline coming. So this is an opportunity to buy. My average is only $4, so I hate averaging up, but I did average.
Why did you give it to me at $8 then if yours was $4?
I added more at 8. I did. So my average came down a little. Went up. So I added at $8 again, and then it went down to $7.50, right, Jason? And then you were gonna almost sell.
I did sell a little bit. I'll be honest. I was trying to be like conservative. Oh, I have too much margin, so I sold some, and it was dumb. And I sold some ATNX, and it was dumb. Anything I've sold has been, other than my AMC, other than that, anything I've sold has been dumb. But yeah, that's my story, and I'm sticking to it. All right, well, Tom, thank you for coming on and giving us FTNT. You guys, that's Tom's pick today, February 2nd, 2021. We'll see Tom in another few days.
Before I go, can I say something? First of all, I'm not really with you because I'm busy. I'm buying BCRX stocks as we speak. Vivian convinced me. I'm busy this moment. I'm just buying it as we speak at 10:33.